Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at a viewer request company, which I seriously found it very interesting. I think hopefully you'll like it too. It is a company that I think everyone uses. I looked at all my sources and it's a rated of a buy, as well as, more importantly, 91 years of dividend streak without a reduction. So hope you like this video. Sit back, enjoy. Do me a favor, hit that like button. If you're not yet a subscriber, hopefully by the end of this video you like the content and subscribe. It really does mean a lot to me. And don't forget to hit the notification bell so you don't miss out on any of the videos that I put out. Please remember that this is not financial advice. I'm not a financial advisor. With that said, let's take a look at this company. So the company I'm talking about is ADM, Archer Daniels Midland. The ticker symbol is ADM. This is a company that procures, transports, stores, processes, and merchandise agricultural commodities, products, and ingredients. So I want a little bit information about it. Definitely go check out their website. Pretty good. There's a lot of information in here about the culture, about the company, about what they're planning on doing. Now if we go to some more information, why invest in ADM? So you can see significant upside potential. They built a better ADM position for growth based on enduring global trends. You can see by the numbers, the fundamentals: 800 facilities, 59 innovative centers. They have 317 food processing locations. You can look over here, 200 countries served. And then you can see the financials, 85 billion, and then 90 years, right now I think it's 91 years of consecutive dividends. That is amazing in my opinion. And you can see the market cap, 38 billion. And look at their credentials, founded in 1902. And then they have a credit rating, so pretty solid. And then you can see here what their plans, building a better ADM, and then over here is the path, their plan to a path to sustainable long-term growth, as you can see, as well as some of their portfolio. So they've been acquiring some of these companies, as well as trying to diversify their products. So pretty interesting. Take a look at it. Now take a look at Simply Safe Dividend. Based on their dividend safety score, they're rated as 94, which is very safe. The dividend yield is 1.80, and then you see the beta in here. Market cap is a large cap. Now let's take a look at key metrics. Payout ratio is 24. During the recession, they've increased their dividend. And then look at that, 91 dividend streak of 91 years without a reduction. And if you look at the dividend growth, the last 20 years, 11%, which is fast. Last 5 years, which is pretty slow, 4%. And then the latest is 8%, which is fast. Again, look at that. It's beautiful, going upward. 91 years, man, that is phenomenal. Without a reduction. 46 consecutive increases, that's even good. Payout details: when are you going to get paid? Paid quarterly in the months of March, June, September, and December. And then your annual payout per share is $1.60, and then it breaks down about 40 cents. Yeah, and then although this one is considered overvalued based on Simply Safe Dividend, if you look at the price week range, it is a little bit higher. The 98 is the high, so it's 88, so you're getting it really close to the all-time high. Our 52-week high. And then you can see here some of the information, total sales, billions. You can see the return on investment capital, return on equity. Now if you swing to tip ranks, based on their rating, they rated as a moderate buy. 4 of them, 2 buys, 2 holds. Price target is 97. At the time of this video is at 88, and which is a 9% upside. And then their target is a high all the way at 117, and then the low of 84. Now if we go to a little bit more analysis, 7 is the neutral, the hedge funds have decreased their shares, and then there's also inside trading have sold shares. So if you look at the hedge funds, they've decreased it in the last quarters, and then it's a negative, very negative. Now if we swing to Yahoo Finance, you can see some of the performance outlook. You can see pretty bullish in there. Now if we look at the earnings, you can see 4 beats the last earnings, and it's pretty much, look at that, beats. And then if you look at the financials, you can see an increase from 2020 to 2021. 2020 is 64, and then from 2021 is 85 billion. So pretty good. You can see the recommended trends, a lot of hold with some strong buy, and then you can see right now currently the average is 98, and then you got your over here, so your high is 117. Now if we swing to Seeking Alpha, what I wanted to see is the 10-year performance, and then the 10-year performance is about 211%. If you look at the 5-year performance is 103%, and then year is 41%, and then the year to date is 30%. Now if we swing to Market Beat, based on their analysis, they're rated as a moderate buy, 1% upside. You can see the dividend strength is strong, and then you got all these other ones inside the cells, and then the projected earnings growth negative 13. Now if we go to Webull, based on 16 analysis, they rate it as a buy. You can see 50% said it's a buy, 25 said it's a strong buy, and then 18. Looking at the price target, you can see 117 is the high, 98 is the average, and 80 is the low. Yeah. Now taking a look at NASDAQ, you can see based on NASDAQ analysis, there's 11 of them. They rated also as a buy. And then you see JP Morgan, you can see some of Morgan Stanley, the well-known one, Barclays, and then you can see the analysis, a high of 117, an average of 97, and then the low of 84. Now if we swing also to bar chart, based on their analysis, they rated as a high of 117, the mean is 98, and then the low is 80. And then they also rated it as a moderate buy. You can see 3 months is pretty much the same. Based on 10 analysis, you can see 6 holds, 4 strong buy. Now let's take a look at Stock Rover, and based on their analysis, they rated also as a buy. You can see 4 buys and 6 holds, and then you can see right here the average price target of 117. Now if we go to I wanted to see the risk and return, comparing it to the S&P 500. You can see for the 5-year return, S&P 500 is 56%. The industry is about 11%, and then ADM is about 136. And you can see the 3-year return 142 versus the S&P with 31, and then the 1-year return is 43, and then it's 14%. And then you can see the growth here based on the S&P 500, EPS 500, 24, 12, and then the profitability, price to book ratio, and then you got your dividends right here. Yep. Now swinging along to simply Wall Street, based on share price and fair value. Fair value rates it at 89. The current is 88. It's undervalued based on them. And then you can see right here some of the rewards as well as the risk. Pays a reliable dividend. Earnings grew 55%. And then the earnings are forecast to decline an average of 9% per year in the next 3 years. Has a high level of debt. Now if we go over here, you can see the top shareholders. You can see Vanguard, State Farm Insurance, and all that. These are the people that hold it. And then looking over here, you can see institutions about 80% hold it. Yeah. And then so that's about it, man. Thank you so much for watching. Please check out the other videos as well. Like and subscribe if you haven't done so. For me, I think it's a good company to invest on. I'll definitely put this on my watch list and see where I'm going to invest on it and how much I want to put in there and where does it play in the portfolio. But definitely a good company to invest on, in my opinion. So thank you so much for watching. Hope you liked this video. Please be safe out there, stay cool, keep investing, and I'll catch you guys in the next video. Right, take care. Aloha.